Well, the news outlets are full of more property news, with some spruiking that the hope of a rate cut in February has spurred people into action after the holidays, with a focus, by the way, on Melbourne property prices rebounding. In the meantime, Shane Oliver over at AMP tweeted, "Clearance is up sharply, possibly helped by rate cut talk, but they're only back to average levels for February and have come on low volumes. Expect February rate cut talk to provide support." Actually, the January update on prices from PropTrack showed that nationally prices fell just 0.1% in January to a median value of $796,000. As with any model, though, it is only an average estimate and does not go granular enough to be really helpful, but I guess it makes good copy for the journos. Clearance rates are another metric in focus, but as I've discussed before, they're also full of holes. Specifically, preliminary clearance rates generally fall as a result of more auctions are collected. Domain reported a 66.6 national clearance rate, but a year ago it was at 60.6%. So really, there isn't that much of a swing from last week, and listings are still rising quite fast. And remember, a small cut of 25 basis points or even 50 basis points this year won't pull mortgages back down very much, remembering that many had been enticed with loans at 2% or below before the RBA started its hiking cycle. So a couple of points here. Firstly, of course, the rate cut cycle may or may not start in February, and nobody knows how low it will go. Probably not as much as many are predicting. Secondly, I think all of this talk is overdone at the moment, because if you look carefully at the data, the momentum is still relatively weak and we are seeing more properties being listed. I think that trend will also continue. And the final point is that within individual markets, some properties are going up, some are going down. So these averages and this overall high-level talk is relatively meaningless, because it's actually down to what is happening on the ground. And